First, I think the Biden administration, and this is in their interim guidance, still has a tendency to place multilateralism, transnationalism above sovereignty, right? A sense that these are big challenges happening. They are unfolding sort of amorphously. Everything from pandemics to climate to cyber to digital. So I think a different view of that is that states are behind all of those things. States push those things. These are not amorphous developments. These are developments pushed by states for varying reasons with different agendas. They don't just happen or unfold. A sense that these are big challenges happening. They are unfolding sort of amorphously. Everything from pandemics to climate to cyber to digital. So I think a different view of that is that states are behind all of those things. States push those things. These are not amorphous developments. These are developments pushed by states for varying reasons with different agendas. They don't just happen or unfold.
Never before have we had such a unique opportunity to make a positive impact on the world. What really matters now is educating for the future, averting climate change, and ensuring that no person gets left behind. One of the biggest challenges in delivering, evaluating, and investing for results is a lack of good quality, trusted impact data. To count what matters, we need high-definition data with crypto-economic proof of impact. What if you could track and value the impact of your contributions on people and the planet? Introducing ICSO, the blockchain for impact. Driven by data and optimized by AI, ICSO provides a trusted global information network that is owned by everyone. This enables you to become the creator of your own impact projects and a stakeholder in the projects you believe in. The ICSO protocol ensures that impact claims are verified with the help of intelligent evaluation oracles. Verified data is a valuable digital asset and is minted as an impact token. This enables us to value what counts. Now you can watch projects around the world grow in value as they generate proof of impact. In the time you took to watch this video, ICSO could have verified exponential impacts across the world, enabling people like Nahal to have a future. If this is the impact we can have in 90 seconds, imagine what we can do together to achieve the global goals to end poverty, protect the planet, and ensure prosperity for everyone by 2030.
Just as a background around the human capital markets. So this idea of wealth being concentrated in a small number of people, and then you have lots of poor people. And it's almost like a plumbing problem. Like capital has to circulate in order for the system to keep going, like for growth. For people to continue to make money, capital has to flow. If it gets locked up, the whole system falls apart. And that's why, even after the last 2008 crash, everyone's like, still spend money, because if you stop spending money, the whole system falls apart, okay? So to keep the money flowing, that's why we have to turn the poor into commodities. And the data structure for that, and this is to channel transnational global capital. So these are the 2,000 of the world's largest asset holders, BlackRock, Blackstone, UBS Bank, Deutsche Bank, Citigroup, Goldman Sachs, all of these players, Vatican Bank, Saudi Sovereign Wealth Fund, all of this money is locked up and it needs a place to flow. And we are reaching a point in which the general population did not have liquidity or buying power to keep that going. So that's why this shift has to happen in terms of turning people into these gambling commodities. So then the rich are playing amongst themselves this gambling game over who gets the more money. That structure rolls through the United Nations Sustainable Development Goals, which may seem like to make not much sense. Like, how does the UN connect to impact investing? but connects very directly. 2/3 of the 17 Sustainable Development Goals are about poverty. There are a few that are about water and carbon and climate, but it's only like 4 or 5 of them. The rest are about public-private partnerships and about education and health and smart cities and justice and all of these things about managing populations, okay? So those were passed in 2015. The Global Impact Investment Network was set up like 2007, 2008, right around the crash. And that was getting everybody on board for metrics, impact metrics for social impact. Okay, they're connected. So that's 2008 or so, Judith Rodin and the Rockefeller Foundation. With the B Lab, they got everybody set up with the metrics now to play their game. Down 2015, everybody signed up for the UN Sustainable Development Goals, okay? And we're thinking climate, but really it's a little bit of climate and a lot of poverty. So then there's something called the Impact Management Project, which is these 2,000 largest asset holders that are going to channel their capital into fixing the climate and solving poverty, okay? Because that's the apparatus, that is the plumbing to keep the capital moving when the poor can't buy anything. Okay, that's the new model, the new economic model. And this is largely backed by Open Society and Soros. It's called the Institute for New Economic Thinking. And he's bought thousands of economists all over the world at like $50,000 a pop. Open Society has to like set this new economic system up. So it's all tied to the UN SDGs. Number 3 is, I believe it's number 3 is health and number 4 is education, okay? They have said to make the impact markets work, it all has to be mediated digitally through ICT, individual communication technology. So that's phones and tablets, okay? So all of the UN SDGs, ironically, are supposed to be channeled through digital devices. Why? Because they need the data for the impact investors, okay? Like if you teach a kid something, but it's not on a dashboard, does it count? Well, it's not gonna count for UBS Bank, so it all has to be on the dashboard. And so what we're seeing in terms of the shift to everything digital is to capture that data, to justify it for these. And it may not be fully online yet, but it's normalizing it, okay? So the way in which you have playlist education, it's not because that's better education, it's because it's better data collection for these impact markets. So I know much more about the education side because I was tracking ed tech for a long time. But healthcare is the other huge piece. So the nodes of sort of data collection on people are education and training, skill building, healthcare, and healthcare also includes mental health, and it also includes like addiction treatment in that. And then supportive housing. So that's like housing for people and services around their housing for people who are unhoused. Those are the 3 main areas of data collection. So what we've seen with this lockdown situation now is all of a sudden, at least 2 of these major industries that are connected, health and education, are all platformed. Everything is online. School is closed. No more school. Probably never any more school unless we wear like hats with pool noodles on the top or something. I mean, it's ridiculous. And so as I was studying this for the last 5 years, this model is called the learning ecosystem. And it's supposedly, I guess, when we go out, that you don't have bricks and mortar schools anymore. You just, it's like Pokemon Go education. You bump around and earn skill badges, like the Girl Scouts or the Boy Scouts, and it goes into your learning locker that later you can be, the AI can profile you for a job. But you learn through projects in work-based learning settings, and you go to the rock gym and earn a badge, and you go places in your community, but it's all under surveillance, and you do this instead of school. And then most of it's online. And for high school kids, you would just have a cheap Chromebook. And again, it's all consumption, not creation. You can't really make much on a Chromebook. You can just consume and be consumed. And then the little kids would be in these alternative settings like the YMCA and the Boys and Girls Club. And this has all been set up for at least the last 15 years, this infrastructure, as after-school programming and summer school programming. And I was always thinking, they call it learning ecosystem, it's out of Knowledge Works in Cincinnati. And I was like, how are they gonna close all the schools? I was like, you know, I'm telling people, this is coming. And they're like, we can't see it. And I'm like, how are they gonna close all the schools? Like, who would ever do that? Me and my husband, he's like, no one's gonna close all the schools. Well, yep, didn't see pandemic coming, right? And so now, we've closed all the schools, and then the conditions under which in some places they're reopening schools are so horrific, it's like a prison. So people don't want to send their kid back to school. One, either because they don't feel safe because of health concerns, or two, they just think it's brutally awful. So there you go. Like, that's the education piece. Is pandemic leveraged essentially the learning ecosystem rollout once we're allowed out with our QR codes to check in at all the places. And this is tied in with blockchain vouchers, education vouchers, which will be these ESA savings accounts. I mean, the other thing that we've seen too is telemedicine, which is not, I'm not as deeply immersed in the medical side as the education side, but clearly the same situations were being set up in medicine with electronic health records and the Affordable Care Act and standardizing medical care, standardizing all the healthcare codes, normalizing telemedicine. Like, that has all been in the works for some time. IBM and Google working on AI analytics around medicine in other places with socialized medicine that they could get the big data sets. So that's already, like, now, you can hardly see a doctor, right? You have to be screened through the telemedicine protocols. I mean, the other piece on this is supportive housing is that there are many people that, despite, restrictions put on evicting people now and sort of postponements, there's a very clear sense that a lot of people are going to probably be dispossessed out of their current living situations, like in the next year. And while there's a lot of organizing going on around immediate, like, don't evict these people today, and that's what I was trying to convey, like, within the past year with, like, the tenants union and more socialist housing organizations, is that it's not just about the people. Like, we need to understand this pay for success infrastructure within supportive housing, because eventually that's the next frontier. It's not just keeping people in affordable housing situations. We have to take on this affordable pay for success housing, or essentially, and a lot of these housing, supportive housing programs are run through religious groups. So essentially, the Vatican Bank is very deep into a lot of this. In Philadelphia, Project Home is the lead person with pay for success finance. And so then the question becomes, if all of a sudden large percentages of people have to access housing through pay for success deals that are connected ostensibly through faith-based entities, God forbid you get associated with one that isn't aligned with your belief system. Like, what does that mean? Like, in order to, like, not be on a street, like, and you probably won't be able to be on the street because the drones are after you, like, you have to comply with a belief system that may not even be yours. And then someone is getting kickbacks because this is the new human capital commodity scenario. There's huge ethical questions that we should be asking. And the other piece of this, there's a model. Santa Clara County, California is the incubator for a number of these early phase pilot programs. There's a pre-K one called Strong Start, I believe, an early literacy one. There's one for mental health, and there's one for housing. The housing social impact bond is called Welcome Home, the Welcome Home Social Impact Bond. These deals, these pay for success deals, are overseen by a third party that assesses its success or not, according to the terms of the contract. The Welcome Home Social Impact Bond, the third party assessing the data is Palantir. So Palantir is Peter Thiel's company that maintains contracts with ICE, Department of Homeland Security, and predictive policing contracts. Okay? So you're unhoused in Santa Clara. Maybe you have someone in your extended family who's undocumented, and now all of a sudden your access to housing, your data is run through Palantir because someone structured it as a global financial market. I mean, and in that, one of the investors in that deal was the Reinvestment Fund, which is based in Philadelphia. So you're essentially turning people's basic human needs into global investment markets and conditioning that on a level of surveillance that's tied into a very clear predatory police state apparatus. And very few people are talking about that yet, but that's going to be the aftermath of this COVID situation. What happens when your housing is predicated on a health status, right? And you leave for the day and somehow, like, somebody that you were in touch with 2 weeks ago changes your QR code and you can't get back in your housing. Like, these are all things that are probably very technically possible now. They're not perhaps scalable or socially acceptable. And that's what I keep saying. There are these pilots that are in place that should they become normalized, should they become scalable, will have profound implications for humanity. Silicon Valley are not our benevolent overlords. They're just not.
Yeah. Do you want to? Did you talk about digital ID? Did you want to talk a little bit about that, or is that something you kind of delved into?
Yeah. So the whole concept of human capital data commodities depends on, and also smart cities and Internet of Things, is that essentially there's one portal that aggregates all of the data on how you interact through technologies in real time. And these items are connected on, it's called a self-sovereign identity system or decentralized identity system. Often people are looking at blockchain as the mechanism, although I don't think it necessarily has to be on blockchain. And this premise that that you accumulate assets, right? And these are assets that are maybe outside what I'm saying, like currency. Like a digital asset could be your birth certificate, your marriage certificate, the property you own, your certifications, your credentials, academic or otherwise, your health status, your voting records, your health records. All of this data accrues in one place. And what they will say, what the privacy people and the data commodity people, like, you have control over your data. Like, you can use it however, you can unlock whatever part of data that you want. But MIT has developed something called Enigma, which allows querying on encrypted data. So it may not be personal, PII, like personally identifiable information, but in aggregate, they can use and tap into that information for their impact deals. So digital identity systems have been prototyped through, again, global aid. There's something called ID 2020 that is connected to the United Nations, and I believe it's Microsoft and Accenture are the enablers, and the Rockefeller Foundation is part of it as well. And I know a lot of folks on the conservative side of things sort of point fingers and say, the globalists, watch the globalists. I'm like, we're the globalists mostly. Like the globalists are Microsoft and Accenture and Deloitte and KPMG. Like there are many globalists that are embedded within the United States. Not exclusively, but we have to understand that, like when we're looking at the United Nations. They're not a benevolent entity at this point. They've had longstanding ties to the Rockefeller family for years and years on the Trilateral Commission. So they're this apparatus. But ID 2020 is one of the systems that was used to track refugee populations. And they will pitch it by saying, like, oh, you need to run out of your house in the middle of the night and you don't have your papers. Don't worry. Once your retinal scan is on file, you'll just take it wherever you go. And like literally what they're setting up is, when I talk about like programmable money, they're doing their refugee benefits tied to retinal scans, biometrics in places like in Scandinavia, like the Syrian refugee population. So they pay for their groceries with a retinal scan, right? Well, how convenient until you get labeled a dissident, right? Like, and then once they have that biometric data, there are whole issues about it being hacked or encrypted. Like if it becomes misused, you don't get that back. And that's like that's not just a password you can change. You can't change your biometrics. So these systems that have been refined through aid packages are now finding their way back into the United States. So Michael Bloomberg is a key player in smart cities and smart policing and impact investing through Bloomberg Philanthropies. He has underwritten, and he but he's donated significant monies to thousands of mayors of mid-sized cities around the country and the EU and India to get on board with data-driven government. And they backed a project in Austin where they were assigning blockchain identities to unhoused people. Again, ostensibly so that they could keep their medical records on a QR code. But that opens them up to become these impact commodities. And now there's a lot of blockchain work going on in Austin. That project evolved into something called MyPass, which is connected to the Roberts Woods Johnson Foundation. It just so turns out that QDX Health, which is based outside of Austin, it's between Austin and San Antonio, like that company has developed blockchain health passports. So like I haven't made a direct link between the Austin homeless blockchain program and QDX Health, but very clearly once you have a digital identity program set up on blockchain, having a health component like would plugged right in, I mean, seems the next logical conclusion. So these systems are underway, and like I had mentioned Amply, the pre-K identity app. The state of Illinois, not a surprise because Chicago is the futures market, right? Like what we're talking about is human capital futures exchange, really, is what we're talking about. That's why Pritzker, that's why University of Chicago, Chicago Boys, this is based in Chicago. The state of Illinois, they have a blockchain task force where they've looked at all of the options around blockchain. And there's a report that you can look up online, the Illinois Blockchain Task Force project, I think it was 2018, where they had a number of thought experiments about how they would use, and this is the programmable money, so no, that's useful to think about. So this hadn't been implemented, but what they did was they were theorizing in a diagram SNAP, or food, money to buy food on blockchain and what that would look like. And that you would have an individual with a digital identity, you would have a digital wallet that would have a certain amount of access put into that wallet. And then when you used that money for food, and it would probably only be programmed for food, your SNAP versus your housing or your healthcare, if you made the right choice, for the healthy choice, it would put money back into your wallet as like a subsidy. But if you made the wrong choice, it would just be full price. Okay, so they had like an apple and a hamburger. And so they would say, well, if you bought the apple, we'll like ding you back a quarter because we love that choice. That's a really good choice that you just made there. The problem, and there are a lot of people like, that sounds great because people should just be making the good choices. But there's no structural analysis, because what that is not seeing is that this person may live in a food desert where they can't get the apple. This person may work 2 jobs and some side gigs, side hustles, and they can't get to the grocery store with the produce when it's open. This person may live in a squat and not have access to cooking opportunities. Like, there are many reasons by which the right choice is not the possible choice. And then people say, well, it's just a plus. But the thing is, eventually then they will cut it back, and then the SNAP amount allocated into that system will only suffice through the month if you always make the right choice.
Or if they decide that, baby formula, or you know what I mean? Like, there are health, corporate health versus, a community garden type thing. You know what I mean? Like,
yeah.
They could declare that, oh, this vitamin, enhanced processed food, we've declared this to be healthy.
Right.
You know what I mean?
Right. Who gets to say what's the good choice and what's not the good choice?
Right.
And then, so what if you look at this diagram, it's very simple. If your premise is there's the preferred choice and the unpreferred choice, you can apply that to anything, correct? You could apply that to a medical treatment. What's the evidence-based choice? That's going to be the preferred choice. And who's benefiting from that being the good choice? School curriculum. What's the preferred choice? What curriculum module? Do you have to pay a surcharge for the Black Panthers curriculum module, right? I mean, literally, or somebody like who has a different ideology. If you have something outside the non-corporate state, you're going to pay for it. And maybe you're not going to be able to because we'll just put it out of your price range. What if it's a therapy, right? Well, we hear that this evidence-based virtual reality therapy, CBT therapy, is just the best. You want talk therapy? We don't really do that anymore. I'm sorry. So when we talk about programming money and controlling people, and then in the post-lockdown economic crash scenario, way more people are going to be put in positions of being controlled, ostensibly by the decentralized, wonderful blockchain liberation. But in reality, it is, in my sense, it feels very fascist.
Yeah. Another thing I think about with the own your own data, privacy, you have freedom, is I would get into arguments with people about sweatshops, and people would say, well, people don't have to work in sweatshops if they don't want to. These people choose to work in there. And I was like, well, they don't really have a choice. If you're poor and these are the only people that have money, that are willing to give you money for your work, you don't really have, you don't have a choice. A choice implies that you have other options.
Right.
And so I think that people are going to be in situations where they don't really have any other options than to sell their data or just to allow, you know. What do you think about that?
Well, so I tried to make a little video myself to try to talk about blockchain benefits and smart contracts, and like to conceptualize how to make it visual for people. Towards the end of this, this imagining a warehouse like full of individual lockers of data, like those kind of warehouses where you have extra storage or whatever. And outside of each door, there's a pad that has like real-time data flow about like the quality of the data that's in there. And that you've got social impact investors who can like, maybe they're just robots actually with a scanner thing, strolling the halls of the warehouse, like looking for a good buy on data. And so I sort of envision three kinds of people, data sets. You've got the rich people who never need to sell their data. Like maybe they have a digital identity, maybe all this data is being collected on them. They never have to sell their data. They don't care about their data. They can just actually like pull a curtain down on their little number quality thing because nobody needs to look at their quality because they're not selling. They're not selling anything.
Or I'm sure the collection on them is going to be vastly less.
Well, they might have their own island. Like this is my concept is like Richard Branson out on Necker Island is probably not going to have so much Internet of Things stuff. You know, his stuff isn't going to be all censored. The public subsidized housing, that's going to have lots of sensors on it, everything, right? And then maybe you have people who are like, make me a deal. Like maybe if I got a good like investment on my data, I could go take that vacation. Like maybe that's nice. Or maybe it's like somebody who's making by, but like their kid broke their arm and they need some extra money to take care of unexpected medical bill. And so then those people like are just waiting to see like what kind of deal can I get? But then you have poor people who are totally dispossessed who just like have to leave their door open and just hope somebody finds something worthwhile because they're not going to be able to live without selling the data. And they just have to sell it at whatever price they can get it because that's just how it is. And I think, that's what we see in Philadelphia is that we have such a high poverty rate. We have so many people on the streets. We have so many people who are living through these like economic cataclysms. They don't really have these choices to make. And adding data as a commodity isn't freeing anybody. It's just a new way to capitalize on people's misery, in my mind. I think what I'm looking for is a world of reciprocity and like right relationships, and that isn't something that is transactional in this micropayment freaking blockchain world where everything is calculated, right? And everything is predicted. Yeah. I think that's an anti-life way of going about things, and that's my personal opinion. I just want to offer a little bit more clarity around these human capital bonds and the financial structure so that people can because I think that is a central concept that people need to understand. And they change up the terms for it sometimes, so it makes it hard to pin down because they'll say, oh, it's not a social impact bond, it's pay for success, or it's not pay for success, it's a social impact partnership, or they'll continue to change the words. But essentially the premise of this human capital financial system that's moving forward is that there are equations that are used to cost out sort of negative externalities. And there are academic institutions often will be brought in to create these equations, these think tanks, to determine your return on investment. And so they cost out, what does it cost if you're incarcerated? And in many respects, growing the levels of incarceration and documenting the cost of incarceration are really going to feed into these impact markets because that's going to be a giant cost offset. What is the cost of providing special education? What is the cost of someone having depression and not being able to work? Everything, all of these human elements or social or policy programs are going to have money attached to them. And then the premise is that if you can preemptively fix someone, and this may be that the person hasn't even ended up in that situation. They may have never been incarcerated. They may have never actually been diagnosed with depression. They may never have, been identified as needing special education, but if you profile them into their potentiality of that, right? It's almost like a pre-crime scenario. You can preemptively fix them from something that may have never happened and generate a cost offset, because you would say, it's going to cost us X thousands of dollars to fix you if you've been broken. It'll cost us only a fraction of that to fix you preemptively so that doesn't happen. And the space in between will negotiate our profit, and that's the profit that will be taken by these investment entities. So I just want to make it clear that the history of this structure goes back much farther than I initially thought. I had originally thought that this started with social impact bonds, which came out of the United Kingdom, and Sir Ronald Cohen developed them, and I think about 2010. And the first one was the Peterborough Social Impact Bond, which was a prison bond, and that was early on. And then several years later, I think in 2012, that concept was brought over from the UK to the US, and the first social impact bond here was Rikers Island, which was another prison social impact bond to ostensibly provide services so that people wouldn't end up back in prison. And again, even within that concept, you have to understand that that's not looking at the structural nature of incarceration, that being incarcerated is essentially something that is the problem of the person as opposed to a problem of a social system. So I had thought it started with social impact bonds in this sort of 2010 era. I found out later that actually the government performance contracting system was much earlier and actually started in the mid-1990s. And this happened in the Twin Cities area, which wasn't any place. There's sort of a geography to this. There's this idea of, New York as hedge funds and DC as policy and Silicon Valley as tech and entertainment, and in different, Boston as venture capital, these different cities that have different, Chicago as futures markets, different cities. Twin Cities was not on my radar at all. But it turns out that the Twin Cities is also where charter schools started. And it was right around the same time. And the Minneapolis Federal Reserve, there was an economist there, his name is Arthur Rolnick. So Arthur Rolnick, and also a gentleman by the name of Stephen Rothschild, who was a former executive at General Mills, who had started a sort of work-ready program for at-risk adult men in that area, got together and created in the mid-1990s a prototype for performance-based contracting for the government. And for Minnesota. And that was the very earliest structure upon which all of these pay-for-success contracts now have been layered on top of. So that's important to understand, that it goes back to the Federal Reserve research early on, and that Stephen Rothschild was connected with Clayton Christensen, so this idea of disruptive innovation. And it goes back to this early stage. And it's important because one of the major players in this space, in the development and use of philanthropy to catalyze social impact finance and human capital data analytics, is coming out of Silicon Valley. And the Silicon Valley Community Foundation is the largest community foundation in the country, if not the world, definitely in the United States. And it cycles lots of tech money, and a lot of that is actually also in cryptocurrency. So it's a huge behemoth, and it's sort of a slush fund. The money goes in and it sort of mixes around, and then it can come out, and it makes it harder to track what money is coming from whom and undertaking which programs. But that is a central feature. And it was created by combining two large pre-existing foundations in the Bay Area to make this community foundation. And the first director, his name was Emmett Carson, and he came out of the Minneapolis area to come and run. And then in 2012, in this Santa Clara area, which is a pilot for a lot of Pay for Success, they actually brought in Stephen Rothschild to talk about this model of performance-based contracting. So within the geography of how these innovative systems of finance work, it's important to understand the role of Art Rolnick and Minneapolis, because Art Rolnick later ended up partnering with several important individuals on something called the Invest in Kids Working Group. And if you're going to create a human capital market, you want to maximize, and it's based on human capital data, you want to maximize the amount of data you collect. So their framework is that they would emphasize on early childhood education, because that's starting early. Actually, at this point, they're actually backing up into prenatal and home visits for pregnant mothers. So that's about as early as you can get in terms of like conception to get the data. So it's backed up even further, but there's a profound focus on
sperm. I mean, that's.
Yeah. But the being, it's these home visits, which are showing up all over the place, and I'll talk about that in a minute. But early childhood and pre-K is a focus. And I think also if you can start to shape the mindset of that generation, knowing that many of the timeframes for these larger systems transformations are projected at 2030, 2035, these pre-K kids now are going to be the adults of that future, and you need to groom them in that model. You need to bring them along from the earliest age. So this Invest in Kids working group was a connection of Arthur Rolnick from the Minneapolis Federal Reserve. He was the research economist. Jim Heckman, who I had mentioned previously at University of Chicago, Nobel Prize winning economist in human capital, and also Robert Duger. And Robert Duger was a manager of capital for Paul Tudor Jones, who's one of the largest hedge fund managers, Tudor Capital Investments, and he has his own funds. So we have to understand that these human capital investments are integral with not only global capital markets, but specifically hedge fund markets. So, and those hedge fund markets depend on movement of data, continual movement of data for the gambling and the betting and the derivatives. It's not just venture capital that you're going to put money into developing a company or a business over long-term patient capital. No, this is stuff that's moving constantly. And that's why this idea of hooking people into Internet of Things sensors and devices and recalibrating your understanding of their value, their economic worth in real time is so important to this process pursuing. And it's a very grim and sort of brutal process. I mean, I don't want to in any respects say that I'm okay with this, but you have to understand the mechanics to understand why you have kindergarten children with clever badges and why you have pre-K kids on surveillance play tables. It really ultimately is both to serve the hedge fund markets and to train up these kids to live in these virtual environments, these coded worlds that are in the pipeline for the fourth industrial revolution circa 2030.
Tell me about the Harlem Children's Fund.
So the Harlem Children's Zone, that has been in place for like 30 years. And is this idea that there's this geographic zone in Harlem where sort of it became an area that private investors could invest in community-based services delivered to the residents of Harlem, many low-income residents, many Black residents. It involved privatization of their public schools, often through charter schools, but also wraparound social services supports. Which in many respects seems like a wonderful thing, right? But again, I would say it's being framed as a human capital market. So what the Harlem Children's Zone, it was backed by Stanley Druckenmiller, who was another hedge fund manager. He worked closely, he managed one of George Soros's funds. Together they shorted the British pound for like $1 billion. So that's the kind of work that they do, and they're involved in this social welfare program in Harlem. Again, over the course of 3 decades. Paul Tudor Jones, who Robert Duger with the Invest in Kids Working Group had worked with for quite a number of years, another hedge fund trader, he had, his charity was called the Robin Hood Foundation. It is called the Robin Hood Foundation. And it is sort of one of the most sought after sort of peer groups of the hedge fund trader philanthropy community in New York. And every year he has a giant gala and Oprah Winfrey comes and all of the people come. And, it's the place to be is at the Robin Hood Foundation Gala. So the Robin Hood Foundation is pouring money along with Stanley Druckenmiller into the Harlem Children's Zone for these social welfare programs. What has come out of it over these decades of like studying these folks as sort of test subjects was a set of equations. It was a book that was like 168 pages long that had return on investments of different types of investments in poor people. So if you gave a poor child, a low-income kid, glasses, this was your economic return. If you treated their parents' addiction, this was the return. 168 pages of cost offsets based on investments. So essentially that is the manual that once this scales well beyond the Harlem Children's Zone, in order for these hedge funds to play the game, the rules have to be clear, there have to be a clear understanding of what the returns are and what the metrics are, and it's all agreed upon. If the rules aren't clear, no one's going to play the game, right? And they need the game to go on. So all of these systems were put in place to standardize the terms of the game. Now, Geoffrey Canada led the Harlem Children's Zone, and it's interesting because Canada and Stanley Druckenmiller were both at Bowdoin at the same time in Maine, small school. And so they were very tightly connected. Now, Canada has since sort of stepped back from the Harlem Children's Zone, but is working on consulting, and is consulting in Promise Zone neighborhoods that have been laid out in federal legislation as sort of these investment zones all over the country. And these promise zones and also later opportunity zones have been set up to accept this sort of private investment in human capital. But we have to understand all of this human capital as something that quantifies people as data and essentially values people merely for their perceived contribution to an economy that is increasingly run by robots and doesn't need people, right? So it's a very twisted system of how we're both profiling people, controlling people through the data, all of which is framed as a caring service providing role, when really it is not empowering to the people. It is very paternal, like controlling of the people, because for the most part, there's not a lot of choice made in how they operate within these investment systems. They're just acted upon. And so it's just, I think within this historic perspective, there's a reason why this happens in Harlem, right? There's a very specific reason certain communities are targeted for these interventions. And to believe that these hedge fund managers, including Paul Tudor Jones, who got his start in cotton futures specifically, you have to understand it within a continuum of history to make sense of it. The other piece is that I had mentioned home visit legislation. South Carolina is the pilot project for this nurse family partnership home visit program tied to Pay for Success Finance also. As part of this package, and this is partnered with South Carolina Medicaid, they were slipping in this app. It was a behavior tracking app called Goal Mama. And this app was actually developed by the wife of Pierre Omidyar. Pierre Omidyar developed eBay. And she has like a patient compliance neuro research gamification program going on. And so they developed this app, and it was sort of, pitched as they would solve poverty, because all you need to solve poverty is a nudge, a digital nudge at the right time to make you make the right choice, right? It's not looking at structural analysis, it's merely imposing from the outside these coercive digital measures on vulnerable communities. And this was embedded in the Nurse Family Partnership Program in South Carolina. So again, South Carolina, like a center of, Black resistance to slavery. Like, there's a reason why these different geographies are targeted, and there's historic overlays to that. These home visit, there's a significant home visit legislation that's happening all over the country now that's being pushed really hard, including like having people in the homes of women like a few days after childbirth. And the question is, to what end? Is it to get this predictive analytics data for these investment programs? Can people refuse these programs? Is it going to come with a digital identity system for these children? Because the state of Illinois has actually piloted blockchain birth certificates with Evernym, which is a Salt Lake City based company. So they're talking about blockchain birth certificate programs already. And then how do we extract from this? How do we keep our families and our kids out of this data analytics systems? And I will say it's a challenge, because I come at this from a more left-leaning side. The people that have been the strongest confronting these overreach and these home visits have been conservatives, and many mothers, and very well organized. And for that, I'm very grateful for them to stop this overreach. I mean, it would be one thing if these programs were voluntary, that you chose to do them. It would be another thing if it wasn't involving Pay for Success. It'd be another thing if it wasn't involving coercive apps that would track people's behaviors. And I think increasingly now, with the contact tracing and these health status check-ins and QR codes, people are being more conscious about how these phones, these ICT, individual communication technology devices, are being used to in very prescriptive ways, in ways that begin to confine people and control people. We need to be having really robust conversations about what's going on here, because children are, I have this banner that I keep taking out with me. I'm like, children are not impact investment commodities. They're not data commodities. They're children. And I think at a very fundamental level, across political spectrums, like, we should be protecting our children from these systems, all of our children, like, and not just like my child, but like, we should be standing up with the people who are most at risk in these situations. And I think there's a lot of concern within the context of the pandemic dialogue of family removal, family separation, a lot of uncertainty about how this is actually going to play out. But I think, this will disproportionately impact frontline workers, workers in care industries, many of those precarious workers, people who are Black and brown, Indigenous folks who are going to be at risk on the front lines. And how do we protect their families, their family units? That's really important to think about. So it's kind of the intersection of these two things. If you're talking these investment markets, everything is about virtualizing life and social relations and uploading it as data on a dashboard. And it's very important to understand that these dashboard entities, like who they are, like who's creating the dashboards that are going to run our lives. A big force in this is Salesforce and Mark Benioff. So he's a big person that's backing these data dashboards. Also, Microsoft and Ballmer, they have these social suite, social solutions that are going to, if you're going to do these performance-based government social welfare, privatized welfare contracts, you need them on a dashboard. And so when you hear gap, essentially a gap means you're going to take someone's data from this point and try to close it, right? Like, that's how these performance contracts work. You'll say, look, if you close the gap, we'll pay you. If you get the gap closed to this amount, we'll pay you this much. You close it to this amount, we'll pay you this much. So it's a way of engineering humans and communities on dashboards. And once you create a global market around poverty management, around gap closing, you really have no incentive to stop the gap. Like, once the gap is closed, the game is done. Like, we're just done with the game. The gap can never close. So the gap can shrink and expand and be managed and moderated. And if you understand that the investors in this are hedge fund investors, some of whom will likely, that the debt on this privatized social welfare will be securitized, and that there will be people who are actually shorting these deals. So there will be people betting that the deals work, that the interventions work, but there may also be people buying the debt, betting it won't work, right? And that totally undermines this idea that we're only paying if things work. Once you securitize the debt and people are betting against it, it's the whole thing. Like, it's a catastrophe, right? But the idea of dashboards and gaps are critical. They will never eliminate the source of their market. It's not logical to think that the global hedge funds would create a system that would ultimately stop their market. If it's profitable, you will grow that market. That's just how it is. That's the logic of the market. If it's profitable, you will create more poverty that's managed. That's just how it is. We're a city of high poverty. I'm in Philadelphia. Right. So we're identified, and we actually have been specifically called out, like the Philadelphia Economy League wrote a white paper in 2016 saying that we're going to be the impact economy. Like, we are so great because we have a lot of poverty. We have a lot of people who love innovative finance and a lot of rich people. And you know what? Like, if you've got a lot of something, how do you make money on it? So they're going to make money on poverty with pay for success finance. And when I talk about metrics, there's this metrics books that's connected to the Robin Hood Foundation, but there's other ones too. So a lot of these programs run on public-private partnerships. That public-private partnership model is instrumental in the pay for success piece. And because that's the outsourcing, that's to say, like, government doesn't have it to pay for itself, but we'll outsource it and we'll just pay if it works. There are going to be these new companies that will be these hybrid corporate for the public good. They're called benefit corporations. And some of them are out there and they're like warm and fuzzy, like Ben and Jerry's, and they'll sell you like shade grown coffee and fair trade textiles, and like they're framing it as sustainable development. These benefit corporations that are checked off like on the boxes of like being good corporations and get these certifications. But really these benefit corporations are going to be used for these privatized partnerships. And a lot of the charter schools in California are registered as B Corps. The B Lab was funded by the Rockefeller Foundation. It's out in Berwyn, out on the main line. And they've done their own metrics. So they've set all of their own rules about how things will run with educational technology and the success metrics that'll go along with that. And that keeps the rules of the game clean and going. So Philadelphia has a new poverty committee. It rolled out last year to manage our poverty for profit. And I testified several times, both on education and on housing, about the problem that we have regional workforce development plans that are in place now that say of the top 12 high growth positions in the state of Southeast, or the part of Southeastern Pennsylvania, in our region, only 2 of those jobs were paying, like, there was a $30 an hour job and a $50 an hour job. Those were managerial class, and everybody else was like 15, 12, 10, and 8. And they're talking poverty, but they're not talking about the gig economy. They're like, oh, maybe we should talk about the gig economy. Like, it never occurred to the city council people after multiple public hearings that like they actually need to be talking about the gig economy, that you couldn't talk about homelessness without also talking about the fact that our workforce plan says a vast majority of people are making $10 an hour. Like, so to me, that indicates that there is never an intention for people to be economically independent. That they intend for people to work at Walmart and McDonald's and at these subpar wages and then maybe get this UBI surplus to try to scrape by, but they will never be independent. And a piece of that that's part of this poverty committee is something called the Benefits Data Trust. And it's in several states, and I'd have to refresh my memory about it, but it is about sort of connecting people with benefit systems. And that is what I would say is like my thought process has changed when you understand social welfare as a human capital impact market that's being run by big data and big finance. Suddenly, this idea of the government taking care of people becomes a lot more sinister if the taking care of part involves apps on your phone and tracking and biometrics and putting your snap on blockchain. It's a very different thing than we were led to believe growing up. And so will we stand down and just cede all of the autonomy of people to make their own way, like to have their own path and to support each other in that? And I think the world that we need is a world where this wealth that is locked up in these small numbers of people in this transnational global capital has to come down, redistributed. And it should not be redistributed through these impact investing schemes, because that's incredibly predatory. And again, the data that's coming off of all of this is feeding into AI. And I think that's a terrible thing. That's coming through IXO Foundation, based in Switzerland, is part of this, these blockchain identity systems, and they intend to feed the Internet of Things data that's tied to the human capital analytics into something called Ocean Protocol that will be used specifically to build AI. So like they're mining poor people for data to build the singularity. And like no one's gonna get it until it's too late. It's just.
Meet Kathy. Kathy is a community care coordinator employed by a local nonprofit. Kathy's organization is part of the Better Health Together Pathfinder Community Hub, which makes her part of a regional network of community-based care coordinators committed to providing standardized, whole-person care to people at risk. The hub receives referrals for families and individuals needing support services and pairs them with community-based coordinators like Kathy. Kathy has been helping Joe navigate and access services since he was released from jail. Because Joe will be more likely to succeed if he knows his family is healthy and supported, Kathy will be working with his daughter Sarah and her mother Amy too. Kathy begins by going to their house to start a comprehensive risk assessment that will identify what services Amy and Sarah might benefit from. For each risk, Kathy assigns a pathway, a standard, evidence-based care coordination plan designed to remove barriers to good health. Each pathway is tied to specific outcomes, and Kathy will provide support, accountability, and encouragement to Sarah and Amy to see those outcomes are met and each pathway completed. Kathy learns Sarah has been missing school because of her severe asthma, which has sent her to the ER multiple times. She assigns a medical home pathway to find a regular primary care provider for Sarah and a medication management pathway to verify Sarah is taking her asthma medication as prescribed. Kathy assigns Amy an education pathway to present some information about her tobacco smoking, which might be affecting her daughter's asthma. They talk about available support to help her quit, and Kathy assigns a smoking cessation pathway. Kathy will make regular home visits to check in on Sarah and Amy's progress and can help schedule appointments and arrange transportation. For every pathway Kathy's clients complete, such as when Sarah attends her primary care appointment or when Amy quits smoking, Kathy or her organization will receive an incentive payment rewarding her for those outcomes. In addition to her pathways, Kathy will access the Hub's up-to-date resource portal to find community connections that will support her patient's health. Because Kathy tracks every step of this process in the Pathfinder Care Management System, all of Sarah and Amy's providers can access and share real-time data on their clients. This data helps Better Health Together manage quality, identify gaps in service, and increase the likelihood of success for our community. The Pathfinder Community Hub gets the whole region working together for better health.
Can people opt out then?
Well, so I think our question is, and this was my struggle in education. I kept thinking like, okay, so I refused Google Classroom for my child. Like, I was probably one of the only people in Philadelphia who didn't use Google Classroom. It was paying for, and my kid was very accommodating for that. But it was difficult, right? They want you to do the thing, but we could still do that. They managed to make it out before we turned education into a series of stackable badges, which is what's coming with this learning ecosystem model. Great. What happens if you, and the thing with this pay for success finance and learning ecosystem model is we have to understand that the voucher, like the SNAP voucher, that's going to be your education voucher. And they're going to say like, oh, you can be a free market person and buy your own education. You can make all the best choices with your voucher to buy whatever you want. But really most of the stuff you're going to be able to buy is like cheap, terrible online curriculum. And navigating that, the rich will be able to supplement those vouchers with their own money and the poor will be stuck doing work-based learning in very difficult work situations, I believe. And then the entitled kids will get to work at law firms and stockbroking houses or whatever. Like that's how it's going to go. But once they have these vouchers, they will be coming after the homeschool kids and the unschool kids because the library will be issuing badges. And the community theater will be issuing badges. And they will be sending the data back because they're going to get paid back off of these pay for success contracts too. So all of the things that homeschool, like traditional homeschool and unschool families had access to will get co-opted. So okay, so say we just step outside of all of that and we build a whole parallel education system that doesn't take the vouchers, that's completely independent. Okay, well then your child gets to be 18 and has no badges. In a world that demands badges. Like, every kid that graduates, maybe, in 10 years, everyone graduates with 200 badges. Well, you've got the unschooled, like the hardcore unschooled kid who has no badges. Where do they go? When a global economy is increasingly mediated through AI, human resource stuff. So we have to build a whole new thing. And I'm not saying any of this is easy, but what I feel like in this world that's coming, there will be the tiny bit of billionaires. There will be a cohort of people who are the data analysts that run the dashboards and manage the people who run the dashboards. And they will be essentially oppressing people. Like their job will be to manage the oppression. And then there will be everybody else who will be the oppressed. And I don't, as a parent, want to aspire for my kid to succeed by being in a position to be the oppressor. And I don't mean to say that we haven't always lived in a situation where people of privilege have been in positions of enacting certain levels of oppression. But it will be increasingly brutal and increasingly automated. And I think the mental health impact of that on everyone is going to be devastating. So I'm just trying to think through how do we build a world with no badges, with real knowledge, with reciprocity, in which the resources of the earth and the community are shared in ways that support humane relationships. You know, and that's, I know that's not tall order. Maybe humans are not that good at that. Maybe I should just like throw it in with the robots. But like, I don't want to be with the robots right now. I'm like still resisting.
How do people get paid then? So I'm an investor. I invest in this social impact. Where does that money come from to pay me back plus my profit?
Well, so for now, for the moment, and this is all sort of fictitious capital, right? So it's kind of like they're just making shit up. But is that the government will agree not to pay for the services straight out, but only pay for the services if they work, okay? So this is this government performance piece, that they'll somehow come up with the money if you can guarantee hitting the data mark that you have to hit, so that your kids in online pre-K get a certain score, you know, or your kids, that's how it's structured. Like clearly, if the rich people are not paying their taxes and the poor people can't pay taxes, like eventually the government will start to like not even be able to do that at all, which is interesting. So then there's another form of innovative finance, which is the next generation, that's being called the impact security, which is piloted by these two women, one of whom is an Wharton alumna. And they have piloted this concept where, how do I say it? So an investor can invest in an evidence-based program with a performance-based contract in a nonprofit. And if they achieve it, they can be paid back by a foundation. So in the impact security premise, the government isn't really involved at all. And so in this case, if you realize that the corporations, many of whom say the technology corporations, have parallel foundations, you essentially create the human capital battery system. So say, for example, you have Hewlett-Packard, and Hewlett-Packard decides, and this is all just conceptual at this point, to invest in a early childhood education intervention that's predicated on data where the pre-K people use Hewlett-Packard tablets, products, devices, wearable technology, brainwave headbands, whatever, to get the data. And then they manage to engineer to hit the targets to make the pre-K kids jump through the hoops to get the number that they need to get. And then they're paid back by the William and Flora Hewlett Foundation. And that, you know what I mean? And you could have the Dell Corporation and the Michael Dell Foundation. You can have Microsoft and the Gates Foundation. Like you can have any of these technology companies on the one hand are making this investment and paying each other back. So they're just circulating their corporate capital and their philanthropic capital round and round and round. And the people are caught in the middle making the data. Now so the impact security right now, the case, they've piloted it in San Quentin prison, and it's framed as job training, doing coding for incarcerated people. And they say, oh, look, we're doing this great, we're training people who are incarcerated to become coders, and they'll get good wages, and we're paying them more than they would get paid otherwise doing other types of prison-based labor. So it's a win-win, and but the impact metric for that security to be met isn't that when upon release those individuals get a stable job in the tech industry. Like that's not the success metric. The success metric for the deal is a certain number of hours worked, right? So that's what I'm saying. When you structure these deals, you can structure them in ways that you can define success in the terms that work for the investor, not for the person who's caught in the deal. And for the most times, the people who are caught in the deal are people with very little power when they're individual and isolated.
And you mentioned that there could be a situation where secondary and other markets could be created where they're actually selling these investments between each other as well. Is that correct?
Yeah, so there's another, and this is still incipient, right? Like, so some of these, there are actual proofs of concept. Some of them are sort of piloted out on paper. There's a platform called Alice SI that's based out of the United Kingdom. That's a blockchain investment program in human capital, where I think ultimately the idea is that speaking of which, you don't necessarily need a government investment. You might not even need a corporate investment. You could just have a rich person investing in a poor person, okay? And this would be done on blockchain. And that there would be tokens, and this is another way of using these tokens to demonstrate compliance and performance and gamification. And that the tokens in this, there's a white paper from this Alice SI platform that talks about securitizing secondary markets for these tokens, these investments in poverty interventions, evidence-based poverty interventions. So they are specifically talking about developing secondary securitized markets on that tokenized debt. I don't know at this point if they have actually done securitization on that yet, but definitely they're trying to figure out how to do it. And the other piece I want to mention is in terms of a proof of concept that is troubling. So I had mentioned IXO Foundation was backing amply this pre-K blockchain identity system that was tied to attendance and payments to people based on pre-K attendance in Cape Town. IXO Foundation hosted a bunch of impact investors and blockchain people about a year or so ago, and they developed sort of these new, partnerships. And one of the partnerships they developed was with something called IO2 Foundation, or also it goes by Shanzai City, and it's based out of Hong Kong. And the guy who's in charge of that was educated in Hong Kong and at Columbia University and London School of Economics. So these are very much global players. What's come out of that partnership is actually a way of triggering impact tokens for poverty management programs using video, facial recognition video in people's homes. So in this case, I had mentioned these home visit programs are the pregnant mother programs, the Goal Mama app. I had mentioned home visit programs. Well, now you add in a tablet that can take video, and you have social impact interveners coming into people's homes with a tablet that enables video taking and facial recognition on this tablet that would enact blockchain payments if you could prove that the intervention was successful in whatever that way that was. Like, I don't know if the child needs to perform some task in front of you. Like, I don't know if you're documenting. I don't know what. They have a number of papers that talk about how this is called like last mile verification on blockchain. But so they are essentially mixing the sort of innovative finance Swiss banking model with sort of cutting edge AI, blockchain, facial recognition work coming out of Asia. And so when I talk about this is not a Democrat or Republican thing, this is not a national thing. I mean, it does involve empire and US like finance, but it is a global enterprise that we're looking at, and that what we need is to understand these models, and that any model, once it's secured and becomes socially normalized, can be anywhere very rapidly, especially since it's all connected to the Sustainable Development Goals and often operating through UNICEF. Because actually that pilot program was happening in China, but also in Brazil, in Boa Vista, which was tied to this Bolsa Familia family subsidy for low-income families in Brazil. They were using the same technology, this facial recognition technology, in people's homes. So people very much are becoming the batteries of these systems. And I think there are many people in blockchain spaces who think of this as liberatory technology. But you tie it to Swiss banking, and you tie it to facial recognition, and you get in people's homes, and you threaten people like potentially with compliance or family separation, and social service programs that are operating at the behest of the state and corporations. And there are very, very many ways that can go wrong. And we need to be very, very conscious. And we need to stand in solidarity globally, because it's coming after all of us.